Hey everyone, and welcome to your strategic roadmap to Area 1 of the Business Analysis and Reporting discipline, or as you probably know it best, BAR. Right out of the gate, there is something absolutely crucial you need to know. Area 1 is the single largest, most heavily weighted part of this entire exam. Now, I want to be crystal clear right up front. This explainer is not some deep dive, granular math lesson on one specific topic. We're not doing that today. Instead, I want you to consider this your master map. We are going to explore exactly how Area 1 works as a whole, what specific topics actually live inside of it, and honestly, most importantly, how you need to rewire your brain and think when you are sitting in that testing center solving Area 1 questions. So let's jump right in.
I want you to establish this massive number in your mind right now. 40 to 50%. That is the testing weight of Area 1. Literally half the exam. That makes it the absolute dominant focus of BAR. Because the stakes are so incredibly high here, we really need to understand why the AICPA weighs this section so heavily. Think about it. The modern CPA, you're no longer just a bookkeeper sitting in a back room crunching numbers. The modern CPA is a strategic business advisor. Because of that shift, Area 1 is way less about just memorizing isolated accounting rules, and it is far more about your ability to interpret results, compare different alternatives, identify actual business drivers, and ultimately reach sound, actionable conclusions. This is the section where your analytical skills are put to the ultimate test in a real-world, messy business context. Here's our agenda for this explainer. First, we'll look at the two halves of the area, then the topic map. After that, we'll discuss the exam feel, followed by a 6-step framework for success. Then we'll run through some mini examples, and finally wrap up with how to avoid common traps. All right, diving right into Section 1, the two halves, current versus prospective. To really understand Area 1, you have to realize that it can be conceptually split into two massive halves. It's almost like the exam has a split personality. The first half is current and historical analysis. This is entirely focused on the present and the past. You're basically looking backward at what already happened. In these questions, you are evaluating past performance, you're analyzing historical financial statements, identifying attribute structures, and figuring out exactly what drove certain cost variances in the last quarter. You're the detective figuring out the why behind the past. But then, on the flip side, we have prospective analysis. This requires you to put on your forecasting hat. It is all about looking forward through the windshield. You're taking that historical information and projecting what might happen in the future. You're using past data to build budgets, project future cash flows, value potential new investments, and manage future market risks. And here's the kicker. On exam day, a complex task-based simulation might actually force you to do both. It will give you historical data as a foundation, and then ask you to use it to forecast a prospective outcome. It's literally the difference between reading the scoreboard and predicting the final score, and you have to master both timelines. Moving right along to Section 2, let's open up the topic map and navigate this terrain. The AICPA blueprint groups topics very, very deliberately. Understanding this layout is like a cheat code. It's going to help you quickly identify what a multiple choice question or a simulation is actually asking you to do. Under the historical analysis umbrella, we basically have three main pillars. First up is financial statement analysis. This is where you're running your DuPont analysis, comparing operating characteristics over successive years, or benchmarking your company against competitors. Second, we have non-financial and non-GAAP measures. There's a really fascinating concept here, which is how non-financial measures act as leading indicators. For example, a big drop in customer satisfaction metrics today, well, that might reliably signal much lower profits next quarter. You're connecting those dots. You'll also deal with non-GAAP measures here, which adjust standard GAAP figures to reflect how management actually views their core operations. And finally, the third pillar, managerial and cost accounting. This is where you roll up your sleeves and break down specific price, volume, and mix overhead variances to truly understand why your past production costs completely deviated from standard expectations. Now, when we flip over to the prospective side, the topics get very forward-looking. First, you have budgeting, forecasting, and projection. This is where you'll evaluate production budgets and maybe project future cash flow shortages before they even happen. Then there's capital structure. This is all about weighing the cost of debt versus the cost of equity to find that perfect optimal mix that maximizes the firm's value. Next up is investment valuation. Here, you are comparing strategic alternatives using financial decision models. Think net present value and internal rate of return. Should we buy factory A or factory B? You've also got risk management, which heavily tests your understanding of the COSO Enterprise Risk Management Framework and how to actually mitigate ESG-related risks. And finally, economic and market influences. This is where you have to zoom out and analyze how outside macroeconomic shifts, like sudden changes in interest rates or massive supply chain disruptions, could impact the business's bottom line down the road. It's all about the big picture. That brings us to Section 3, the exam feel. We are moving from numbers to meaning.
Listen, if you are used to the heavy technical journal entries of Area 2, Area 1 is going to feel completely different. It can actually be a bit of a shock. This area shifts you away from the pure mechanics of accounting and pushes you straight into the realm of true business advisory. So here is your mantra for Area 1. Write this down. Meaning over mechanics. The AICPA uses Bloom's taxonomy for their skill framework, and Area 1 has the absolute highest concentration of analysis-level tasks. They don't just want you to punch numbers into a calculator. Let's consider a quick comparison. In Area 2, you might be asked to record the complex journal entry for a brand new depreciation method. Pretty standard, right? But here in Area 1, you aren't doing the journal entry. You are analyzing how that specific depreciation method impacts the company's debt covenants and their future lending capacity. See the difference? When you calculate a variance or a ratio in Area 1, the very next immediate question the exam will ask you is, okay, so what does this imply for the company's profitability, liquidity, or risk profile? You have to interpret the data.
So how do we tackle this? Let's get into Section 4, 6 Steps to Success. This is your analytical framework.
To survive this massive analytical shift and actually thrive on the highest weighted section of the exam, you need a reliable, repeatable framework. When a massive task-based simulation throws a giant wall of text and 6 different exhibits at you, panic is just not an option. You need this 6-step system. Step 1, identify the actual business question being asked. What do they really want to know? Step 2, sift through all those exhibits and identify only the relevant data. And I mean only the relevant data. Candidates fail here all the time because the AICPA intentionally packs in distractor data just to test your judgment. Don't take the bait. Step 3, choose the right metric or valuation model. Step 4 is where you finally calculate. But notice something here, calculation is only step 4. Do not stop there. Step 5 is interpreting that calculated result. This is absolutely crucial because step 5 is often where the subjective reasoning points are awarded in a simulation. And finally, step 6 is reaching a definitive business conclusion or making a recommendation. The examiners are grading you on steps 5 and 6 just as heavily, if not more heavily, than step 4.
All right, Section 5 already. Let's look at some mini examples to put this framework to the test.
We are going to look at 3 high-level flavors of questions, just to show you exactly how Area 1 problems present themselves on exam day. Here's our first flavor, a ratio or trend question. Imagine you were given 3 years of financial statements. The question doesn't just ask you to calculate the simple percentage drop in gross margin. That'd be too easy. Instead, it asks, what does this variance mean for the company's gross margin trend? To solve this, you calculate the variance, sure, but then you have to look at the underlying data. You have to put on your detective hat. Did the cost of goods sold spike because raw material prices suddenly increased? Or did management intentionally lower their sales prices just to push a higher sales volume? You have to investigate and explain the actual underlying business driver causing the shift, not just report the math.
Example 2 is a classic managerial and cost accounting scenario. You are given a massive exhibit filled with absolute noise, fixed overhead, variable overhead, actual labor hours, standard rates, and a whole bunch of sunk costs. The core challenge here isn't just remembering the formula for a direct labor variance. The real challenge is step 2 of our framework, identifying the relevant data. The examiners will actively, purposely try to distract you with irrelevant fixed overhead data or historical sunk costs that literally have no bearing on the variance whatsoever. You have to prove that you can sift through that noise, extract only the direct labor inputs, calculate the variance accurately, and then, here's the kicker, explain if management is facing a rate issue or an efficiency issue. Our third example dives straight into prospective analysis. The prompt gives you 2 different long-term projects and the company's capital structure details. And it asks, based on the weighted average cost of capital, which investment alternative should management choose? Notice the phrasing there. You have to calculate the cost of debt, factor in the tax shield, and find the weighted average cost of capital, the WACC, based on market values. Then you might have to compare the net present value of Project A versus Project B against that WACC hurdle rate. But your final answer, it is not a percentage. Your final answer is a definitive recommendation. You literally have to say, choose Project A because its return exceeds the cost of capital. You have to make the actual business decision. Okay, final stretch. Section 6, avoiding traps. Let's make sure you don't sink in the quicksand. As we wrap up our map of Area 1, we absolutely have to talk about the examiner's quicksand traps. These are the most common pitfalls that cost students easy points. Trap number 1, calculating a perfect number, but failing to interpret what it actually means for the business operations. A perfect calculation with no context gets you nowhere. Trap number 2, pulling irrelevant distractor data from an exhibit just because it happens to be sitting there right in front of you. Trap number 3, confusing similar non-GAAP measures or cost terms. For instance, mixing up a liquidity ratio, which measures short-term obligations, with a solvency ratio, which evaluates long-term debt capacity. They are not the same. Trap number 4, falling back into your comfort zone of mechanical journal entries and missing the bigger economic picture of the scenario. And finally, trap number 5, missing the actual recommendation. If the simulation asks which project management should pick, and you just type in the WACC percentage without actually selecting a project, well, you haven't answered the question. Don't leave those points on the table.
For Area 1 of the BAR exam, you have to step into a completely new role. You are the analyst, not just the calculator. You are being tested on your real-world ability to synthesize historical data, forecast future risks, and confidently advise management on the best strategic path forward. So keep that 6-step framework locked in your mind always. Always prioritize meaning over mechanics. And remember to look beyond the numbers. So my question to you is, are you ready to look beyond the numbers? Good luck with your exam preparation, and I'll see you in the next explainer.